Welcome to the Bioptimizers Awesome Health Podcast. And now here's your host, Wade T. Lightheart.
What is Awesome Health? It's actually an acronym that stands for air, water, exercise, sunshine, optimizers, mental beliefs and attitudes, and education. These are the pillars of peak health, and my team and I have created a free 12-week course that you can use to transform. Each day, you'll get a written and video lesson delivered to your inbox. Everything is covered from the foundations of digestion to advanced alternative therapies few people know about. And again, it's 100% free. Just go to bioptimizers.com. That's bioptimizers.com.
Good morning, good afternoon, and good evening. It's Wade T. Lightheart from Bioptimizers with another edition of the Awesome Health Podcast. And today we're going to talk about a really important subject that I think is on the minds of many people in America and even around the world, but America specifically. And it's regarding health insurance. And today we're going to talk about how a lot of insurance companies' lack of transparency is affecting you, and basically how insurance giants are gaming the system and make us pay the price. And what we're going to also talk about is how to future-proof your business with a high-performance cost-saving plan, and hopefully start creating a conversation around of how do we lead incentives to what's true, taking care of your health versus incentivizing being sick. And I think there's an opportunity with the current administration. They're trying to address some of these issues, but they'll never catch up to the speed of us as business owners and as protagonists in this fight for better health. The reality is there's a lot better options available to people. Myself and many of my fellow health advocates leverage these, but there may be a way that we can incorporate this into your insurance program, but it's not likely that your regular insurance broker is going to tell you about it. So today, we've brought in Chris Hamilton, who is a partner at Hotchkiss Insurance in Texas, where he leads the employee benefits consulting practice. He specializes in managing healthcare and insurance costs to improve benefits coverage, reduce expenses, and enhance employee health outcomes. With over a decade of experience in corporate finance, Chris has advised clients across various industries, including private equity in oil and gas. And he joins us today from Fort Worth, Texas. Welcome, Chris.
Hey, Wade. Thanks for having me.
So we had an opportunity to talk shop a little bit, and there's so many different things here in the insurances and how the system is kind of stacked against people. I think most people are getting their insurance benefits from an employer or through an employer. And yet many of the incentives on that system or how it's structured really doesn't help a person move towards better health outcomes. And of course, I think medical-based bankruptcy is one of the highest rates of bankruptcy in the United States. In the United States, the government doesn't provide health care to the same extent that it does in other socialized countries. I'm from Canada originally, for people who don't know. Now, we have a very advanced social program around healthcare. However, we have some of the same incentives and problems in there. And so the difference between if you get sick in Canada or you have a condition, you might be waiting a couple of years for a surgery or die waiting or trying to see a specialist that isn't available to your location. It's a whole complication and you pay a higher tax rate. In the United States, you have to fund it yourself, usually through a corporation, which has a high premium. Often, though, you can get to see specialists and outcome better, but maybe your benefits don't cover. And then, of course, there's the third area. People like myself, and I think a lot of our listeners, spend a tremendous amount of money on preventative maintenance. You know, I take my own blood test. I do specific genetic-based research. I offset some of the genetic disadvantages I might have. I use supplementation, detox strategy, lifestyle intervention. And the data shows that people who do this can extend both the quality and length of their life by as much as 10, 15, 20 years over what's expected for the industry. And I first got turned on to this way back when I read a paper that was written in 2003 by Professor Oshansky. It was under the Bush administration. And he said at that time was the first time in history that the life expectancy of the children of the society was going to be less. And then the further examination of that was the disability adjusted life expectancy was down to 60 years old. This is over 20 years ago, this paper. And we've gone further backwards and downward trends since that time. Recent data has shown that we've lost life expectancy by 4 or 5 years. This disability adjusted life expectancy, for people don't know what that means. That means that you're going to have some compromised state of life, which requires continuous intervention, of course, associated medical costs on top of that, and a very much reduced quality of life. So, our company, of course, is a nutritional supplement company, but our goal is to help people have stronger, longer, better lives, to leverage technology, nutrition, supplementation, and various modalities of health preventative maintenance in order that we can create those better outcomes. And they're available to the world today, but none of the, or very little of the insurance companies, their brokers or representatives, and, I'd say at large, have a misidentification of what really health insurance is. I'm so glad that you joined us today, Chris, because this is a very confusing and emotional based conversation, because usually, people go, oh, I get benefits from my company. They don't really examine those. The company has to provide them or wants to provide them and says gets whatever coverage is available under the brokerage or representation. But that may not be the best coverage for both the corporation that's providing it and the users, the members of that team that are doing it. And so I thought we'd bring you on today, dive into this topic, because it is very relevant for our health and well-being of both the generations present, people who are getting insurance, but also what's coming down in the future. And hopefully we can start getting conversations and dialogues to say, let's create a better model based on technology as it is today.
Yeah, I mean, wow. Everything that you just opened up with, that could be a 5-hour conversation. I think there's a couple things in that opening commentary that you shared, particularly about your experience in Canada. I think there's something to tie in to the United States healthcare system. One of the things that I noticed, particularly on social media, is this growing, it's almost at a roar now for socialized medicine in the United States. And there is some room for that conversation. I don't think it won't have the intended outcome that people want. And some of the commentary you made around the way socialized medicine works in Canada is really relevant to talk about, especially in light of the way the American healthcare system is designed. We primarily have an employer-based healthcare system, and it goes all the way back into the 40s under the Truman administration. But we can start wherever you want. I think most people probably want to understand, how do we get here, and why does the system work the way that it is? But I'm happy to start wherever you want. Yeah,
let's do that. And just as another element, I have a lot of team members, friends, and colleagues that live in, for example, Europe, which also has a socialized program. But people are not aware that if the state that decides that you're in a situation, in a health situation that doesn't warrant a positive outcome, they just cut off your benefits. So once again, I understand, with the costs of healthcare insurance in the United States putting a significant amount of pressure of the individuals, I would ask the question, well, when has the government been able to provide a service better than individual companies or people who are experts in that? Very seldom. You built in the inefficiency of a large corporate structure, a political agenda that could be funded by groups that aren't necessarily got the same outcome in mind, I think. So if you can maybe walk us through your research in the area, in your own story about how this became a priority in your own life that decided you to move into this field, I think that would be very helpful, because I think there's a personal element and then a professional element that needs to be covered. And I always say, people who do the most or the greatest or the best things in life usually come from some sort of personal trial, tribulation, or negative experience that says, it gets them, just kind of mad, upset, angry, like, I got to find a better way. So how did this all come into your awareness as a pathway?
Yeah, I appreciate you asking. And so I'll tie all three of those things together. So professionally, my background is in finance and economics. I spent over a decade in corporate finance, and I was helping companies finance mergers and acquisitions, equipment, lines of credit, working capital, those sorts of things. And so you get to really sit down and understand how businesses compete, how they make money, how money moves through their organizations. And this was pre-Affordable Care Act. And what I noticed is this rising cost of healthcare inside of these businesses. And so if you look at just about any company in existence of any size, the cost of health insurance is typically going to be the second or third largest expense that that company's going to bear, behind the cost of materials or of whatever they're building. If they're a service organization, it's going to be number two behind payroll. So it's really expensive. And so I could see this creeping up over several year period. But I also had the benefit, I worked with brokerages, health insurance and just insurance brokerages in general. I had 2 clients and I was helping them finance acquisitions. And so I'm working with them. They are my client, and I'm helping them raise debt and equity to go around the country and buy up companies like mine. And seeing how they made money and how they looked at corporate clients and how they placed business with insurance companies, I really started looking at that business model and thinking, like, well, there seems to be some sort of misaligned incentive here of the insurance companies and the brokerages that are providing this consulting advice to companies on how to pick insurance. Okay. So fast forward a few years, the Affordable Care Act is passed, which we can talk for days about the Affordable Care Act. It's not affordable. We're seeing that now, and it hasn't really provided more access to care. There weren't more doctors that came into the system. We actually have less competition now. But let's set that aside. There was a provision in the Affordable Care Act, which was well-intentioned, called the medical loss ratio rebate. And before I lose any listener here, what you need to understand about this is it set the rules of the game for insurance companies on how they were allowed to make money. And I say this was well-intentioned because the government didn't want insurance companies to take our premium dollars and then make a fat profit by denying all of our claims. They mandated that insurance companies had to spend 15%. If you're a large employer, so if you have over 50 employees full-time, these insurance companies are required to spend 85% of the premiums they take in on our healthcare. And that's medications, doctors, hospitalizations, those sorts of things that we get from our health insurance benefits. So at the end of the day, that leaves 15% underwriting profit for these carriers. And if they made 16%, they'd have to give that 1% back to all the policyholders. Are you following me? So this makes sense.
100%. Yeah, that's the rebate that comes back because they've been really efficient, and you get a kickback to the people who are paying into it. That makes sense.
That's right. So if you think about these insurance companies, they're publicly traded. They've got to show a return to shareholders. If you think about the incentive of that model, do they want insurance costs to go down or up? The reality is the CFO and the CEO, to show a return back to shareholders, they want to see the premiums go up, and they need a way to spend the money. Okay, so they need the size of this pie to grow so their 15% becomes a much bigger number. But if you follow back the timeline of these big insurance companies, just name any of the big ones, any of the big 4 that we all have access to nationally, what they did is they did vertical integration. And what that means is they started inserting themselves, buying up physician groups, specialty pharmacies, pharmacy benefit managers, and they've created this massive ecosystem that's able to bill the insurance company. They're middlemen in this transaction. And essentially what they're doing is they're contributing to the higher cost of claims, because at the insurance company level, they can only make 15%. But if you own a physician group that's overbilling or overcharging the insurance company, or if you own a pharmacy benefit manager and you're filling and charging more for medications than you should, you're able to show a lower margin at the insurance company, so you're meeting your 15% or less profit margin, and you're capturing hidden profits in these subsidiaries that you own. So these insurance companies, in most cases, are actually contributing to higher costs. At the end of the year, they show they've spent the money, and they have justification to raise their premium. And it becomes almost a circular reference where we overcharge the insurance company, we show a loss at the insurance level, but we're able to capture profitability down in these subsidiary units. And if you look at these companies, these are publicly traded companies. And if you look at their financial statements, their 10Ks, their 10Qs, quarterly and annually, if you look at by division where the money's made, very little of it's made at the insurance company level. Half or more, in some cases, 3/4 of their profit, their operating profits, coming from things other than insurance. And that's physician groups that they own, pharmacies that they own, their PBMs. It's coming from those business units. And what that tells me is that we're overpaying, they're overbilling, and they're showing returns to shareholders, and it's not resulting in lower premiums. So all the value that's created by this vertical integration, if we had an insurance executive on here today, they would tell you we vertically integrate and we own these entities to make a more efficient process for our members and deliver better health outcomes. Well, if that's true, and if it's financially efficient, wouldn't that result in lower premiums? Wouldn't we have some kind of cost stability? No. It is highly efficient financially for them, and the value is being captured and retained for shareholders. It's not for the public good. So, it
reminds me of I read an article by Warren Buffett and Charlie Munger, and they said, well, every year we try to recalculate our models looking at perverse incentives. And he goes, every year I think we got it right. And at the end of the year, we realize we have to readjust because perverse incentives lead to distorted outcomes. And what you're really saying is the perverse incentives, because of capping what is typically a capitalistic enterprise and concept through the regulatory elements of the government, the CFOs and these publicly traded companies have a mandate. Like people have to understand that they are fiduciary responsible for increasing the profitability of the company, or they don't get their bonuses or to lose their job or can be replaced. So we can look at them on one level as, greedy corporate guys with malintent, but really, and that may or may not be true. Generally, most people try to do the best job that they can to do within the reasons that they are within the framework, but because they have a fiduciary responsibility as the executive to do this, this was a creative way to kind of get past the system and expose the liabilities and weaknesses that maybe Congress or didn't really fully understand or fully vet or adjust in the interim since that Affordable Act of Becoming. But there's a long history even prior to that led to the Affordable Care Act, right? I mean, we're going way back. You mentioned the Truman administration. So maybe what happened? How do we get here? And then how do we get the heck out of it?
Yeah, so I'll go all the way back to the beginning. So the birth of health insurance actually happened in my backyard in Dallas, Texas. And Baylor Hospital created a program for teachers. And it was a hospitalization plan. It covered hospitals only. Back in the old days, people would have a relationship with their doctor. They paid for their office visits and the tests and the procedures that they needed. But the cost of getting access to care in a hospital was pretty expensive. And so they tried to come up with a way, hey, how can we manage this with a larger pool of people and cap the cost for folks? And they designed this program, which eventually was implemented in California. And that was the birth of Blue Cross Blue Shield out in California, that network, and it kind of grew. But under the Truman administration, if you look back in history and see what was going on economically at that time, we had wage controls, very high marginal tax rate. So in the upper brackets, it was 90+%. Mm-hmm. And if you're an employer trying to attract talent to your organization, if I offer you $100,000 more in salary, you're only going to get to keep 10,000 of it. So that was not a financially efficient way for a company to attract people. And ultimately what the government decided to do was, we'll let companies tax deduct the cost of health insurance if they offer it, and we'll allow employees to buy health insurance pre-tax. So it's a financially efficient vehicle, if you will, or mechanism to allow an employer to offer something of value and an employee to receive something of value that's valuable compensation, and it bypasses the tax system, if you will. It's not taxed. And the system just grew from there, and it just became a normal daily offering that working inside of a big company, you just expect that they're going to pay for your healthcare. Well, if you fast forward a few decades, healthcare becomes less efficient, it's more expensive, and companies are figuring out, okay, we can't continue to pay the type of benefits that we have today. So over the course of the years, as it gets more expensive, they're altering the way the health insurance is designed and offered to employees. So 40 years ago, you might have a $5 copay and no deductible to go into a hospital and have procedures and those sorts of things. Whereas today, the average deductible is about $2,500. And depending on the size of company that you work for, if you work for a Fortune 500, it's probably a little bit lower. But if you work for a mid-sized employer, that average deductible is going to be $2,500 to $3,500. So there's this big shift. And essentially what's happening is, as the cost of insurance gets more expensive, companies are offering less of it to their employees. You really see this, anybody that's buying coverage on the individual exchanges today, look at the pricing differential between a $2,500 deductible. Most of the plans that are purchased, they're several $1,000 deductibles and $8,000, $9,000 out-of-pocket maximums. It's because you're buying less insurance because of technically the rising costs of healthcare and the cost of catastrophic claims. So that's been somewhat of a very brief summary of the how we got to where we are today. Just to kind of tie in that personal element, and this is really what I specialize in, which is helping employers take back control of their healthcare budgets. If you just look at any of the companies that we work with, whether they're spending $1 million or $10 million or $20 million, they're operating a healthcare division inside of their company. And oftentimes they outsource that to a third party, an insurance carrier and a broker that don't have the same incentive that they do to manage the cost like they would everything else in their business. And so a lot of companies have hit this breaking point where we can't continue to pay for this. It's the way we have. It's too expensive. We need to manage it better. And by the way, we think there's probably some waste and abuse that's happening inside of our insurance. We want to be able to custom design it to provide better benefits to our employees and reduce the cost. And that's really my specialty. And really, this hit home to me because you mentioned this. About half of Americans are buying insurance through their employer. And the only option that they have to pick from is what their employer offers. Mm-hmm. And oftentimes in the recruiting process, we look, do they offer health insurance? Great. Check the box. But really, we're just trusting that our employer is knowledgeable and is savvy about how to manage these plans. Because you can take two employers in the same industry, the same size. One of them's highly efficient, knows how to do this. The other one does not. Not only is the cost of their insurance going to be different, but the benefits coverage is going to be exceptionally different. And I'll give you a perfect example of this. This is my personal example. My brother worked for a Fortune 500 company for a number of years in Houston, Texas. And he had a series of very bad health episodes. He was hospitalized 26 different times over a 4-year period.
Oh, wow.
And he was in and out of different hospitals there in Houston. Over that period, he hit his maximum out-of-pocket costs each of those 4 years, had a number of out-of-network charges, just catastrophic. And he was one of those statistics that you mentioned, had to file bankruptcy because of his medical bills. But he had insurance through a Fortune 500 company. That's just, think about that for a second.
Wow.
It was a little mind-boggling to me. And I'd already been in the industry for a few years. I had an employer that was a mid-sized regional Texas employer. It was 1.5 miles from his office. So literally right down the street, same industry, not a Fortune 500 company. And they offer free health insurance to their employees. And the hospital that ultimately saved my brother's life, they have a direct agreement with that hospital that gives them lower pricing than traditional insurance. And if employees choose that hospital's no cost to them. So my brother could have gone in 26 times and had no out-of-pocket costs. He would have been cured and healed, and he would have not had this financial burden. And I'm thinking to myself, Fortune 500 company versus a regional Texas employer, same medical market, drastically different outcome to the employees. Both can check the box that they offer health insurance, but a different outcome. And that moment, experiencing that with my brother, solidified to me in my mind the importance of the role that people in my role play, not just in helping companies, but helping the individuals that rely. Most of my clients' employees don't even know who I am. But I have a duty to help that brother, that mother, that father, their children, and the decisions and the education that I give to that employer about their options and how to design this in a way that benefits not only the company, but benefits the people. That's my mission, is this can be good for everybody. We can actually solve this problem if you do it the right way, but you have to align the incentives of everybody that's involved in the insurance. And it can be life-changing for that individual that gets the care with no cost or a very reduced cost versus somebody working somewhere else. And companies can take what's a liability and make it a really big asset in the recruiting and retention process if you do it right. But there's so much in terms of misaligned incentives in the industry today that cause us to pay more than we should, and we've just accepted it as normal. And so a big part of my role is educating the market, educating employers that there are alternatives out there, but you got to work with somebody that knows how to do it. And the thing that I'm most thankful for really in the last 5 years is there's a growing army of people like me across the country, and we collaborate with probably 100 different advisory firms to teach each other and to cast this message out there that this is possible, and it's a growing movement.
It's certainly timely because it's in this conversation is in the public domain, it's in the political domain, but more importantly, you illustrated something on the personal level. These are people's lives that can be ruined or saved simply by understanding the nuances of the industry. But there's just, even though there might be a groundswell of people who want that movie, they don't know where to go, what to do, and how to navigate both where are we at, where do we need to go, and who can help us to go where we need to go. I think that's really important.
And now for a Bioptimizers fixed digestion tip, how to get away with eating sugar. Hey, look, sugar is normally one of the worst things for you. But let's be honest. I mean, we all cheat from time to time. And here's a little trick that will ensure your body benefits from the sugar. Now, before you eat or drink anything sweet, take 5 to 8 capsules of P3OM. The patented strain in the formula devours sugar so fast it literally doubles in the body every 20 minutes in the presence of sugar. That doesn't mean that you can or you should eat a bunch of sugar or sit around all day doing that. But on the days that you do cheat, or you go after one of those maybe meals that you wouldn't normally do, this ensures that you get something in your gut that eats the sugar. And it's not going to feed the bad guys or spike your blood glucose nearly as much. So to learn more about P3OM and its sugar-devouring and protein-digesting properties and how it can transform your gut and metabolism, go to www.bioptimizers.com.
Maybe you can start unpacking what are some of these options that people have as an employer in regards to the, providing better care, better insurance, better outcomes than what is kind of like the cookie cutter program. You deal with broker, he puts you onto one of the major carriers, and that's it. You're kind of locked in, and then you don't find out these nuances until it's too late. Yeah. And you're, in a compromised health state and maybe an emotional state and likely a financial state altogether. That's not a great place to be when you're making decisions that are life or death.
Yeah, I guess I'll answer that with a question. Who do you think is most likely to drive innovation and change in a mature industry where change needs to happen? So I go back to, there's a few different examples I'll give you, but if you think about the start of Netflix as it was being spun up in its initial infancy stage, the owners of Blockbuster had the opportunity to purchase Netflix for $50 million. And they thought, oh, that's not going to work. That's nothing, yep. Right? But you look today, right? Blockbuster doesn't exist and Netflix is thriving. You can take the same example, and this was an internal example. Kodak is the group that developed digital photography, and they didn't double down on it because they didn't see that people are going to want a paper image. This is the future. No, it was not. And Kodak doesn't exist anymore because of that. And so as I look at the landscape of what's available in the marketplace today, you've got these large titans, the historical titans of our industry. And you can name any of the big four. You got Blue Cross or Anthem, you got United Health and Cigna and Aetna. Those are the titans of the industry. And the question you have to ask is, are they really incentivized? Are they nimble enough? Do they want to change the industry, or do they want to keep moving it along the same way that it works for them? I can't answer that question for them, but we can use history as our guide, and we can also look at the current landscape to see who is innovating. And it's newer companies that have been on the market for anywhere from 5 to 15 years that have created these programs. They've created insurance companies that are really designed to wring out waste and abuse. And you're seeing more and more people get into the market. You look at Mark Cuban, what he's doing with prescription drugs, right? And I think anybody listening to this knows who Mark Cuban is how do you incorporate programming like that as part of an insurance plan? So we work a lot with Mark Cuban's pharmacy program, and there are other programs similar to what Mark Cuban's doing on the pharmacy side that you can do on the medical coverage side, whether it's getting access to physicians, getting access to complicated surgeries or hospitalizations. But the trick here is most employers are buying insurance from a traditional big insurance company. They're going to design that plan with little customization, and you're going to get their network and the way they do insurance. So the very first thing, this is the foundational thing that an employer has to determine is, do we want to move out of that traditional insurance program? I don't want to get too technical here, but there's really two main types. There's fully insured, which is where you get a guaranteed monthly premium and all the risk is on the insurance company. And you're just getting their ecosystem, what they've built. It's going to be what it's going to be, and you get a renewal, and it could be really good or it could be really bad. Most of the employers in today's market are getting pretty sizable increases in their premiums, and they're having to figure out how much do we pass on to the employees. The second model, and this is where we really focus, is on what's called a self-funded or partially self-funded model. And this is where the employer starts to get more control over how their plan is designed. They can customize the benefits. They can customize how much risk they take. But the main issue that we see most employers moving into this model, the problem we see is that they're using the traditional insurance companies and their ecosystem. So it's not much better from a benefit coverage or financially. So this next iteration where we specialize is teaching employers you can use a traditional insurance company's network, but you've got to find out who the right vendors are based on what's going on in your population and the type of benefits that you want to provide. And so I gave the example of my employer that was down in Houston. They have a decent sized group of employees, and we found a way to connect with a hospital system. There's one of the most reputable hospital systems in the state, but especially in Houston. And we said to them, if you'll give us a better price, forget what you're getting from these insurance companies. If you don't have to collect money from a patient, how valuable is that to you? Because if you think about hospitals, they employ complicated billing departments, collections departments. They're having to chase down money from members. They're writing off bad debt, all these sorts of things. If we remove that from you, we make you the preferred hospital. If employees want to come here, and we pay you timely, what kind of price will you give us? Well, it turns out it's a really good price. So now we're able to reduce the cost of healthcare claims, the price of a baby delivery, the price of a cancer treatment, the price of an open heart surgery, all the things that drive cost. The employee has access to those at no cost or very little cost compared to traditional insurance. The employer is paying less for those claims, and the hospital, what the benefit to them is they're now getting steerage. They're getting employees coming to them wanting services versus the hospital next door. So the hospital has a competitive advantage. The employer has a competitive advantage, and the employee benefits in the process. You can't do that in a traditional insurance plan with a big insurance company. You've got to build this. And it's actually simpler than most employers realize. And so that's one element of this, is how can we align the incentives? The other thing too, is anybody listening to this is thinking, well, what if I don't want to go to that hospital? I like the hospital across the street. Well, that's great. We have coverage for that hospital too, but it's going to be under a traditional network, and you're going to have your deductibles and copays and out-of-pocket costs. You have choice. If you want to go to this preferred hospital, great, it's free. But if you don't want to go there, you have regular, as part of your insurance plan, we'll cover the other hospital, but you just have an additional cost for that hospital. And this goes back to how do we create these incentives, and how do we create a way to make it affordable to companies and employees? Because that's really who the biggest consumers of insurance are. Just if you're looking at the overall population in America, about 50% are getting it through an employer.
Wow.
And if you look at what employers pay on average, I'll tie this back into the comments about the Canadian socialized system and what you have in Europe. If you look at Medicare, employers are paying a hidden tax through their health insurance.
Yep.
So if you look at what Medicare reimburses for a hip replacement, I'll just use that as an example. I had one. I played football through college, burned out my hip. I had to have a replacement. It was my 40th birthday present to myself. And if you look at what Medicare will pay for that hip replacement, it's going to be about $15,000 to $16,000. If you look at what any of the big insurance companies will have to pay that hospital, it's about $55,000 to $65,000 for that hip replacement. So we're paying a large order of magnitude higher than what the government pays for that same procedure. Okay. If you look at it from the hospital's perspective, this is really important to understand. Medicare reimbursements go up 1% to 3% a year. The hospital operating cost is going up 8% to 10% a year. So the profitability of Medicare is inverted, and you can't negotiate it. You can't negotiate with the government. The government's going to mandate the price. And if half of their patient base is Medicare, the other half is individual policies and commercial payers, employer plans, who are you going to negotiate with? You're going to negotiate with the big insurance companies because that's the only outlet that you have to negotiate. But guess what? The hospital knows. If I'm in a major metro city in anywhere in America, just name a big city, New York, Dallas, LA, Houston, that big hospital, for that insurance company to have business, to have employers to sign up for their plan, that hospital knows you've got to have me in network. So they've got them almost by the short hairs, right? Mm-hmm. If you want me to stay in your network, big insurance company, you're going to have to pay me more. You're going to pay more. And you see this happen throughout the country at different times of the year where hospitals will threaten to drop out of network with an insurance company unless they bend to their demands. And really, from an insurance company level, they're just a middleman. They're not taking the risk. Doesn't matter how your insurance is designed. Ultimately, if you are in a plan and the costs are high, it's going to get factored into your renewal. So the insurance company thinks about this from the standpoint, okay, hey, how do I solve this problem? I'll pay you more, but I need cost escalators that happen over subsequent years. I can't do it all year one. We'll reimburse you more every single year. That gives me an opportunity to raise rates every year in a palatable way so I keep my clients. But at the end of the day, employers are paying anywhere from 3 to 5 times what Medicare pays, and the hospitals need that to operate. I don't want to make the hospitals the bad guy here, but there's enough bad guy to go around with everybody. So there's this growing cry for socialized medicine, and if we flip everybody to Medicare for all, and I think you made a really good point. I do want to get your input on this. You talked about wait times in Canada, or perhaps we may not approve your procedure because it's not useful use of our dollars to invest in you at 65 years old, because from an actuarial standpoint, it's not really going to add any years to your life. So just limp on with your bad hip. Right.
Well, this is exactly the case. And I think there's a lot of Americans who are under the guise that there's some magical element within the Canadian system and says, well, we need to move to that. Now, if you would go back in time to the originations of that system when it was implemented, I think it was very good and it provided sort of the benefits that was expected. But again, we went through that process over time. And then the billing elements that were, because, every doctor now is spending half their time in paperwork management to submit all the forms and everything in government and go back and forth. So that's getting built into the cost. Then the best doctors are saying, you know what, screw it. I'm going to go to some other country where I can take my expertise and get paid appropriately with less paperwork involved. That's, management of the business, because I got in the business to save people. I didn't get into the business to be a paper pusher. On top of that, you have an aging population, which is concurrent here, both in the United States and Canadian. So the likelihood of that use goes up. That creates a drain on the government, and therefore the government has to increase taxes in order to handle that. Now, we're at a situation in both countries and most of the industrialized countries of the West, which the premiums being paid or the taxes being collected that are directed towards these government-funded healthcare programs don't cover the cost. So then we're running these deficits. And these are not going to go down. They're going to go up under the current system and will actually break the financial systems for these incentives that are going to come due. Now, you have a large labor force that has been paying this increased cost through, decades. Like, I take my parents, for example. Now, on the plus side, my father, I'll give you two cases. My father went through a serious medical situation with heart disease. He got surgery and stuff. He was in the hospital. It didn't cost him anything extra above and beyond the premium he's paid on his taxes most of his life. He had another friend who got ill and who wasn't a government employee. And the government employees, by the way, in Canada, and I think it's true here also in the United States, they have access to a superior program than the general population. However, it was deemed that this person was beyond care, that was relative. And so now the option in Canada is, well, you can have assisted suicide because the outcomes are poor. Now, keep in mind, from a government perspective, well, there's an incentive to kill off that person that would be, because about 80% of the medical costs are at the last 6 to 8 weeks of people's lives. So wait a second. So now what the government has implemented across the board, even for cases such as depression due to unpaid bills, there are advertisements running in Canada today that says, can't pay your bills, overly depressed. Well, you can choose assisted suicide. They're providing these options for people in their 20s and 30s and 40s.
Oh my
God. So just like in places in Europe where they're now saying, well, you got a hopeless case, therefore we're not going to treat you. We're taking off you the benefits of the program because there's nothing we can do. Well, what's the incentive behind that? Well, of course, because they're like, oh, we got to make a profit. We got to run our operations. We got to do this sort of stuff. And the state is not necessarily incentivized for the health of the population, particularly if they're not in the productive elements of their life and they're in their senior years when most of these conditions become much more apparent and frequent. And so the whole system's upside down. It can't continue this way. So I'm sure in the boardrooms of the big insurance companies, they are all aware of this demographic issue that we have. They're all aware of that. And so, but it's kind of like, well, we got to keep capturing what we can before the whole thing collapses on itself. And I'm glad that there's people like you that understand the fundamental issues of the problem and are providing solutions. So as an employer or as an employee who is either providing or purchasing benefits within the company, what are the options and how would you go about addressing these or bringing this up to topic inside of a corporation that's involved in this?
Yeah. So going back to those two main structure options that I mentioned before, fully insured or partially self-funding, people hear the term self-funding and they immediately think, oh, massive risk. I don't want to take that risk on. But the reality is, unless you're a Fortune 100 company and you've got 100,000 employees or more, you're always going to have an insurance company that stands behind you to cover catastrophic claims and large expenses. And when you move into that model, you now open up competition. So you're not dealing with 4 insurance companies anymore. You're dealing with 36. So there is a real competitive element out there to help cover this financial risk that companies are bearing. Mind you, you're going to pay for your health insurance claims, your health claims in any model that you pick. And so you go to the traditional model, your claims are high, you're going to get a large renewal. So really effectively, you're just delayed self-funded in that case. You're going to pay your claims one way or the other. So what I educate employers on is if we know that to be true, and I've got an in-depth education process I take employers through that helps them understand this is how the model works today. This is what you're doing. One, do you believe in it? Do you like it? Do you think it's fair? Most of the employers I work with say, no, that's not fair. Okay, well, here's the alternative. Let's educate on that. And this is how it works. And then we talk through, how do you actually design it? Well, the first step is let's make sure we get an insurance company that will underwrite your catastrophic risk. You're going to self-insure, meaning the company's going to pay health claims for every employee, every member that's on that plan up to a certain dollar in a year. So if somebody gets cancer, they might only be covering the first $50,000 of that cancer, and an insurance company will pay the remainder. But if you look actuarially just at any group, any population, about 85% of that population is only going to spend, $2,500 or $100 to $3,000 a year on average. They're going in for a preventative visit. They get sick once a year. They may be taking a maintenance medication. They're low utilizers of healthcare. It's really that 15% of the population that's getting cancer, they're in a major accident, they have a heart attack, they've got a preemie baby that's in a NICU for 2 or 3 months. Those are the major catastrophic costs that drive the majority of health insurance claim costs. So any individual that's thinking about buying insurance, or you're buying it through an employer, or you're on the exchange and you wonder to yourself, oh my gosh, family coverage is $30,000 a year for an individual policy. Yeah, you're not buying insurance for the doctor visit that you go to. You're buying that. The cost of that premium is designed to cover the people that have cancer or have end-stage renal disease, or they've been involved in a massive accident. It's the $200, the $500, the $1 million claims. They're infrequent, but when they happen, it's all of us paying into that system that's covering that cost. And guess what? You mentioned it. Ain't none of us getting out of here alive.
Mm-hmm.
And on our way out, we're probably going to drop a big medical bill on somebody as we're going out the door to the other side.
Yep.
And that's why health insurance is so expensive. And so it's teaching employers, okay, we know the people going to the doctor is not really where you're spending a lot of the money. It's not the preventative care. It's not the minor things that are happening. Let's turn our focus on these really big things that are happening. What can we do to move the needle on those? Because if you can cut those claims costs down by 30, 40, 50%, we've just dramatically reduced the cost of health insurance. And I've already shown you in the current system, you don't have any levers that you can pull to do that. So if you move into this model, this partially self-insured model, we can customize the way the plan pays for those things. We can get direct agreements. And that's going to be things for, hospitals, cancer infusion therapy. You can build on concierge medicine as part of your plan. So give your employees a private doctor that doesn't work with insurance. It's dedicated solely to the health and wellness of your employees, helping them navigate a complicated system. So Wade needs a cancer treatment, unfortunately, for some reason. Hey, Wade, if you go to this hospital, you have a worse outcome potentially statistically, and it's going to cost you more money. But if you go to the other one across the street, you have better outcomes and you don't have any costs. It's helping people navigate this complicated system, because most people have no idea. I've got an insurance card. I'm going to drop it on the table. They don't know if it's a $10,000 procedure or if it's $1 million procedure. Nobody has any idea. That data exists, and you've got to find a way to put it into people's hands. And so you've got to, when you build these plans, you can build in this navigation system where employees have whether it's a physician contact that can help them navigate, or it's a nurse that can help them navigate the system. When you're sick and you get that unbelievable diagnosis that you've got cancer, or you need to have an organ transplant, or you've got something major going on, where do you go? Who do you turn to? How do I know what to do, and what am I going to pay? You can build that into your plan that helps the people when they need that care. And ultimately that's going to derive two things: better health outcome, better cost for the employee, and better cost for the plan sponsor, which is the employer. And so those are the things that employers need to be thinking about: is how can I manage this like a division of my business? Because it is ultimately. And a funny story, side note, I was attending a school board meeting here in my backyard where they were discussing health insurance, and I presented in this meeting. And one of the school board members literally said, I don't know why we're spending so much time distracted with this health insurance situation. We need to be focused on educating our business, our employees, or educating our students. That's our business. We're not in the health insurance business. And I thought to myself, lady, your district spends $25 million a year going to $35 million a year on health insurance. You're in the health insurance business. And oh, by the way, you might claim that you're not in commercial transportation business. You employ people with commercial driver's licenses, and you operate 400 buses every day. You're in that business too. And you might say you're not in the food service business, but you operate how many school cafeterias? You're in the food service business too. Let's operate these business units just like health insurance is going to operate the same way you operate food service. You understand what the food service cost is, what the labor cost is of that, the school busing, what does it cost to maintain those buses, but you don't know anything about what you're spending on health insurance, what they're paying for what you're getting, and you're just going to blindly take this massive cost increase. You got to manage that. And the more employers that understand that aspect of it and want to manage it like a unit of their business, those are the employers that have success in today's market. And I would tell you,
and on top of that too, like the individual person, like that particular teacher, they're paying a premium as well. So they're also, it's not just what's coming from their employer. They're paying into this program and not paying attention to what, how to leverage a better outcome.
well, I'll tell you in that district specifically, they did give their teachers a pay raise. It was 3 or 4%. But if you look at how much their health insurance cost was going up, it was double the amount of their raise. So the teachers at the end of the day are actually going to get a pay decrease because of the cost of their health insurance went up. And they're at the same time, they're talking about how do we attract top teachers and how do we retain our teachers? And my first thought was not by blindly increasing their costs. And that's a factor and a dynamic that most employers are grappling with today is how competitive are we in the marketplace? Because people, I hear that I have heard this from several employees of my clients. I'm just working for the health insurance.
Yep.
I need the health insurance.
Yep.
And a lot of people pay attention to what does the health insurance cost now? And what sort of benefit coverage do I actually get? Employees are becoming more savvy because of they're realizing the employers are not the same anymore. It used to be, and I hear this from HR leaders, we used to get the question, do you have health insurance? Yep, check the box. Now employees are saying, let me see your benefits before I sign that offer letter.
Well, and to your point too, the people who are most likely going to have a hypervigilance around this are people most at risk because they probably got dinged in the past and found out inadvertently through a tragic situation or a compromised situation in their life. They didn't anticipate it. Again, they got smacked in the head and went, oh, I got to look into this. And so when they're shopping around for where they might want to go next or whether they're going to stay within your organization, this becomes a major factor in that decision-making process. And as an employer, it's up to us to make sure that we're providing a competitive workplace, plus providing the coverage that people want, plus understanding that what we're hearing from our traditional broker or representative may not be what's in the best interest of us based on the incentives that you outlined before.
Yeah, and just to kind of tie all this together, particularly from an incentive model, but also two trends that I see happening right now that might be interesting to listeners of your show is two things. I mentioned concierge medicine. It goes by another name called direct primary care. It's these doctors that are working in traditional models where if you think about going to a primary care physician or a general practitioner, you're typically in a waiting room with a bunch of other people. You're taken back into the exam room. Before you get there, there's a technician that's taking your height, weight, your blood pressure. You're in the actual exam room. Another technician or a nurse will come in and do the write-up on you. And then you hear this knocking. It's the doctor going from room to room to room. And he's only going to spend 5 to 7, maybe 10 minutes with you. Maybe he's looking at his computer screen. He looks at you. All right, he's going to send you out with either a referral to a specialist or he's going to send you off with a prescription. And it's not what a lot of doctors went to medical school for.
Correct.
And that's what we hear from a lot of doctors is I want to practice healthcare. I want to take care of patients. I want to manage their wellness. I want to manage them as people, not as herding cattle through because I'm only going to get paid this certain reimbursement rate by an insurance company. And the only way I can make money doing this is seeing 40 patients a day. It burns out doctors, both mentally and physically. Patients are burned out by that experience. And we now see this emergence of doctors that are moving from that model, that traditional fee-for-service model, and they want to operate on a subscription basis. And that would be where you or I would pay a flat monthly fee. The doctor's getting guaranteed revenue every month, whether I come in or I don't, and have unlimited access to that doctor. And so it's done a couple of things. It's disconnected the doctor's incentive from insurance companies. They're no longer billing insurance companies. They're auto debiting or billing us as individuals. We pay them every month for access. And those doctors typically will make more money in that model. They'll have less headache. They're able to manage a much lower patient load. They may only see 1 to 5 patients a day, And it allows them to dedicate their time to really understanding you as a person and dive deep into your medical history, do extensive lab work, really help you drive down to root cause and help you manage your lifestyle and add in a wellness component to it. So they want to not only, their incentive is not just to get you in, get you out and get the reimbursement from the insurance company. Their incentive is to take really good care of you, because guess what? If they don't, you'll cancel your subscription. So we've just changed the incentive model to providing better care, aligning the incentive of the doctor to really take good care of you, and getting access to employees. And there's individuals that doing this at scale, just one-on-one with doctors. But what we're doing now and we're seeing now is employers want to figure out, if we do this at scale, can we get this sort of physician group for our entire population? Because if our patients are getting more access to care, getting better care, they're going to be healthier and use less expensive healthcare services down the road because they won't need them potentially. But if they do need those, we now have a physician that knows the system and can help navigate them where they really need to go to get the best care at the best price. The second component to that is these physicians now, they're really focused on more than just prescribing medications. They're looking at, is there supplementation? Does this person need not medication, but supplements? And are there things that we can add to their regimen that will help them stay well or get well? And employers are realizing, you know what? We probably ought to design that as part of the coverage of our benefits. And so many of our employers, when they do this, they're building in coverage, not just for prescriptions, but there's a bucket of funds available for employees to be able to buy supplementation products, which, and I mean, in a lot of situations, there's certain supplementation regimens that might be better for somebody to try to manage a condition or to stay healthy. And
I'll set an example. There's a medical doctor who is actually, he's a vascular surgeon in the UK that treats, people who are, heart disease, scheduled for surgery and stuff. He began giving people under his care that were scheduled for surgery. I think he said in his data was about 25% of the people that, by just taking our magnesium breakthrough product, didn't actually have to go through the medical procedures that was devised by the thing. And so he was a big proponent of that. And then I've gotten a tremendous amount of feedback from various prominent individuals. Some of these are household names who their preventative care doctor or the concierge physician has said, hey, yeah, take one of these Bioptimizers products because it's going to give to a better outcome than I can provide here. And they're seeing positive results, which is really great. So this leads me where I'm going with this is we have a misidentification of healthcare, I think, as a general rule that having these insurance benefits is going to keep me healthy. No, it's really like you identified here with your 85-15% is the insurance program is really built around the catastrophic. And that's great. Wonderful. But how do we avoid the catastrophic when you see that the Surgeon General says that 95% of the reason people are in a hospital anyways are lifestyle related illnesses? Mm-hmm. So, now with genetics and epigenetics and specialists within this field, like for example, I've built a health protocol based on my suboptimal genetics that I leverage supplementation in nutritional profiles. My dietary selection is to offset the expression, it's the epigenetics, of suboptimal genes. And it incentivizes me to do that. Now, where I think I'd like to take this is, how do we take these lifestyle interventions that are demonstrable to have positive outcomes on a preventative care and roll those into an insurance program? Are we able to do that, or how are we able to do that, or are people doing it? And I believe that this will be the future.
Yeah, I think you bring up a really good point. And that exists today, and it even exists in some of the big insurance companies. And these are wellness programs. That's what in our industry that it would be titled as a wellness program. And the thought process is, if we get people healthier, they'll use less, they won't need the expensive healthcare because we've prevented it before it actually happened. And what I would tell you just in practice is those programs fall flat for a couple of reasons. Employees, just think of the average American probably is not going to engage with a piece of technology. The ones that are, I would just say it's a bias selection. Mm-hmm. So if you were on my health insurance plan and I have a wellness program, you're going to participate in it because you're really concerned about your health and you want to optimize your life. And there's triathletes and marathoners and hardcore gym enthusiasts that are part of any employer group. They're going to gravitate towards that. But let's talk about the average employee.
Right.
They've got 2 or 3 kids. Both them and their spouse are working. They're working late hours. They're trying to get home, put food on the table, and get kids to soccer practice or baseball or what have you. They just don't have a whole lot of time. And really the key in my mind is, how do we even start to get that person just engaged? The engagement is the first part. And that's where we find providing this concierge medical practice is really the first engagement point, because if you just look at the data, there's still high numbers of folks that, particularly men, won't go in to get a checkup in a given year. Yep. I talk to people all the time. They're like, oh, I'm healthy. I haven't been to a doctor in 5 years. I'm like, oh, that's not a good thing. That's not a good thing. We need to get people to go to a doctor, and we need people to get a baseline assessment and have a doctor that is capable of communicating to somebody, here's where you are based on what you've told me you want your life to be. Here's the things that we need to do. And you got to start simple. Hey, Johnny, you don't realize it, but you're hypertensive. You're pre-hypertensive. We need to start managing that. There's a number of different ways we can do that. Let's get you on that path. And then once you start with that, then we can add something else. But it's almost like a fitness coach, but for healthcare. And a good fitness coach isn't going to pull somebody in that's untrained, hasn't done anything for 10 years and say, all right, we're going to run a marathon. I'm going to put you through this CrossFit workout. We're going to crush you down to the core. No. What are they going to do? We're going to walk on the treadmill for 10 minutes a day. And then once we've done it for 10 minutes a day, we're going to do it for 15 minutes. And then once you've been doing that for a month, we're going to add some push-ups in, and we're going to gradually get you in and build on it. The traditional medical system doesn't have the ability to support that. It's, I'm broken, I'm bleeding, I have an acute issue, get me in, get me out, I'm going to get paid, you're out, on to the next one.
Yep.
We've got to redesign this, and people are going to gravitate towards the personal connection and the access.
Yeah, to that point, for those who are really interested in this model, I would turn them on to, from a health longevity perspective, doctors like Peter Attia. Mm-hmm. I think he's leading the way with the kind of profiling that you would look at from a preventative maintenance, whether, that might not necessarily fit within your insurance program, but your actions is the best insurance program. And I think this is another point I want to be clear about to everyone. Deference to some outside authority without deep investigation and understanding seldom leads to the best outcome. So it's up to us to be autonomous in nature, to sink our teeth into these things, because at the end of the day, it's not a question if you're going to have a health situation. It's a question of when. And you likely want to push that as far down in the future. So if we were looking at the perfect model of health, is that I live healthy as long as possible till the point that death arrives, and that the window of that compromised element is as short as possible. And I think in the Western world, we just have this kind of antiseptic mentality around death, the suffering, health, all that sort of stuff. We just put that in a closet somewhere, and we don't know how to tackle it head on because we don't have the emotional fortitude, awareness, or maturity to address these things as they are. But the people that do, there's a tremendous amount of options. So where do people turn? I know we're coming up on the end of our podcast. Maybe you could provide some insight for people that this has piqued their interest of how they can get in contact with you, who that you work with. How do you work in structuring these people, for whether it's employees or individuals who want to know more about it? Like, where do they go? What's the resources? How do they find out more? How do they get involved?
Yeah, the typical process is an employer would schedule a call. I would kind of just assess where they are. It's usually a quick call, anywhere from 20 to 30 minutes, just to kind of explain ask questions. They'll give me some feedback on what they're doing, what their goals are. And then based on that quick conversation, we'll be able to assess, is this something I really think I can help you with or not? And then to start that process, I'm easy to find. I'm on various social channels, whether it's TikTok, LinkedIn, YouTube. You can search my name, it'll pop up. But I've got a website that's a central hub to everything, including videos explaining the concepts, case studies and whatnot. It's chrishamilton.com.
Chris, this has been totally enlightening and exciting. As an employer, it's an area that I've been more than frustrated and been seeking out knowledge. So thanks for coming on the podcast. And for those who want to look into this more, the links will be on the podcast show notes. And I encourage you, reach out to Chris, reach out to his team, go check his website out. He's well-versed. He understands what the problem is, and he's got a clear understanding of what the solutions are. And this may be either for yourself or someone you work with, or someone that you is in your immediate family. This may be the biggest decision that you ever made in your life. You can't always anticipate what the future is going to behold, but it's the unanticipated things that insurance is supposed to guide. Be prepared, that old Boy Scout thing. This is an area to take back the control, get the best outcomes for everybody. Chris, thanks for being on the podcast. For all our listeners, check the show notes. Take action. I am, as an advocate for a stronger, longer, better life for people. I can't implore people enough to take ownership of this area. We're doing it as our company. It's a point that I'm super interested. So thanks for coming on the podcast. And for everyone else, we'll see you on the next episode of the Awesome Health Podcast. I'm Wade Lightheart from Bioptimizers. See you on the next podcast.
And now for a Bioptimizers fixed digestion tip. Supercharge your protein shake. Everyone knows protein shakes are a great way to sneak in extra protein, build more muscle, even replace meals and burn more fat. The problem is the highest quality protein typically absorbs at around 40%. One way to fix this and dramatically increase how quickly and effective your protein shake digests is to add 2 to 3 capsules of Masszymes into your shake. One research study showed that pre-digested protein during a meal increased muscle growth significantly. To take advantage of this, just blend the open capsules into your shake, and within 15 minutes or less, the enzymes will have begun to break down the protein into amino acids. This can make your shakes at least 2 to 3 times more potent. Some people do this and sip on their shake while lifting to provide their muscles with a steady stream of amino acids during their workout. To save 10% on Masszymes, use the code SHAKE10, that's SHAKE10, at Masszymes.com. That's SHAKE10 at Masszymes.com.
Thank you for listening to the Bioptimizers Awesome Health Podcast. You can find more information at bioptimizers.com.